Want to invest smartly? Books and courses can teach you the basics, but real success comes from experience. Today, I'll share some lessons that can make or break your stock market journey. Let's go. Follow the trend, not just your instinct. Ever sold a stock too soon, only to watch it skyrocket later? So, why didn't you wait for a reversal confirmation? Instead of guessing reversals, just wait for confirmation before making your final move. Check the financials. A company that's consistently losing money is a red flag. Before investing, check EBITDA, PBT, PAT, debt-to-equity ratio, and price-earning ratio. These numbers reveal a company's true financial health. Diversification is crucial. One stock should not control your whole portfolio. Spread your investments across different assets to reduce risk, because when one market dips, another might rise. Think long-term. Short-term trading may sometimes give you a good gain, but real wealth comes from long-term investing and the magic of compounding. Stay patient and let time grow your money. Master your emotions. Fear and greed, two enemies of smart investing. Made a profit? Great, but don't chase unrealistic gains. Sticking to a strategy beats emotional trading every time. Do your own research. Don't blindly follow stock tips. Learn about the companies, industries, and market trends yourself. Knowledge is power and profit. Plan and execute. Set clear financial goals and risk limits. A solid plan helps you avoid panic decisions and keeps your investments on track. These 7 tips aren't just theory. They're battle-tested strategies. Have an investing rule you swear by? Drop it in the comments. And don't forget to like, subscribe, and hit the bell for more investing insights. See you soon.